Hello and welcome back to the PJTrades review series where I break down all real-time trades that we take in our Discord channel and give it to you guys free here on the YouTube channel. Now, if you guys are enjoying the content, listen, all I ask is please subscribe to the channel, like and comment, and I will continue to bring you guys the free sauce here on the YouTube channel because honestly, man, I love doing it and I wish somebody would have done it when I was trading in 2016. There wasn't a lot of information out there. And now with YouTube, with Discord, with TikTok, there's so much stuff that you guys can learn as traders without spending a dime to do so. So if you're struggling, if you're just beginning your career as a trader and you're looking for just great information, I truly believe this might be one of the best YouTube channels in the game to do so. So thank you guys for being just supporters of the channel. And today I want to get into one of, I think, the best trades. It was the best trade of last week. Was a 98-point winner, official. It went 121 points. But it was just a really, really juicy, spicy trade. It was a counter trend trade. So let's get on into the trade review presented by Tostitos, the chip company. So we were looking on Thursday for just an opportunity, right? There wasn't much to look at and to really get until we get this trade set up here that forms at the 1050 macro, which is honestly my favorite macro setup right now. The 1050 to 1110 macro is literally when I think I've been getting the best trade opportunities. I don't think I know. That's what my stats are telling me right now. So we were very patient on this trade idea, and this is how it ends up playing out on Thursday. Again, if you want to follow along with me, guys, this is Thursday, August 14th. And I'm just going to break down the entire trade model and how we executed the trade. So here we go. I'm going to delete everything like I normally would do with my students and break this down literally from the get-go, from start to finish here. So here is a couple unique things, and I'm going to mark this out just like I would with like in live real time. So first thing that we need to notate is this 830 data wick high. Okay. Over the course of many years of doing this, data wicks seem to be a very, very obvious draw on liquidity when the market puts them in. So we get put in at a 830 data wick high here, and the market obviously makes a low at 836 and then seeks data wick high. Now, the important of this is that we need to see data wick high get swept on NQ, and then we need to see data wick high get swept on ES. So we get both indices swept and cleaned up at the 830 data wick highs. So that is one key element to the puzzle because we don't want to be shorting in this range or looking for shorts here because the data wick highs are resting right above here. So you got to get that data wick high taken care of and swept, and we do so. So that's the first piece of the puzzle. The next piece of the puzzle is the higher time frame. So we're going to jump on the 1 hour time frame and we're going to break this down. So this market ends up putting in a very strong V shape and recovery from this zone here on August 13th. This is the day before. And we get a pretty clean breaker block formation here. It's a pretty clean 1 hour breaker block formation. Okay. So I just want you guys to notate that there is a breaker block and a change in the state of delivery up into here. I'm not going to trade off of that. That's not really relevant to today's trade setup. I'm going to show you what is relevant though. So the market is engineering all of this relative equal highs in here, comes down, recovers, and comes back up into this 1 hour FEG and takes a lot of liquidity with it. Okay. Comes up here, sweeps it, and rejects really, really nicely. Okay. This is when I'm starting to get interested in a potential trade setup. So we get up, we sweep data wick highs. We're sweeping into a 1 hour gap. Now, again, I'm back on the 1 minute. When we're trading, we're all over the place. We're 1 minute, we're 5 minute, we're 1 hour, we're 4 hour. I need to make sure that this trade is aligned. So I need to constantly be flipping time frames, right? So we get that 1 hour rejection, put that into your memory bank and come back to it. Know that it's there and we're rejecting, right? So now the market comes up and digs really nicely into the gap. Okay. At the same time, we put in some really clean relative equal lows here. Now, these relative equal lows are going to be used for the management inside of the trade. It actually is going to be like a fail safe for us to protect ourselves in the event that this trade doesn't work. Okay. Because the first thing we want to see is the relative equal lows on this tiny little 1 minute get tagged. Because if we get that, we're going to be able to make this trade go break even almost immediately and scale position off and make this thing risk free. So I pre-mark out relative equal lows, but the real draw on liquidity is lower than this. This is where we mark out the overall draw on this potential counter trend trade short. Okay. Relative equal lows get put in here, and we have a 5-minute unmitigated bullish fair value gap that the market likely wants to draw into. Okay, it's the first presented gap here. There is a first presented 5 here, but I'm interested in the larger gap. This means there's more liquidity and it's more unbalanced on this side of the coin. So I'm looking for the market to sweep relative equal lows into the 5-minute gap and potentially then reverse from here. But I'm not looking for a long. I'm actually looking for a short here because of how this trade ends up setting up with the liquidity it's engineering to the downside. So you can see that there's a lot of liquidity here, there's liquidity here, and there's all these relative equal lows here that I can potentially draw into. So now we kind of have a thesis. 1 hour bearish fair value gap gets swept, gets filled, and we're digging into it deep. We're leaving behind relative equal lows. We've swept data wick highs, okay? And now we pretty much don't have any other draws to the upside at this point. If this trade starts to set up for us, what we want to see is a V-shaped recovery from here, some sort of inversion up here, and then a draw down into here for a 100-point trade setup. So here's what happens. Market plays out, and boom, the setup forms very quickly. Very quickly. We get a 1-minute inverted fair value gap here right off the rip. V-shape inversion, okay? Now, our entry is literally on the retest, and the stop is above the swing high. This is an extremely cheap trade for us, and I love taking these types of trades. Here's the reason. Because I know that if I can get this correct, if it's correct, and we've planned this correct, that I can get break even at this relative equal low, and I'm already safe. This trade is safe. That's why I love when the market engineers relative equal lows or highs. It gets me protected in the trade so quickly. And now I can ride this trade down with full conviction, knowing that we are definitely going to draw towards relative equal lows now, because that's the draw. Now, side note, timeout. We've recently added to the Discord our very own in-house Lizard, aka Gaines, who is our BookMap specialist. So as I'm trading this, in my other ear, I'm getting yelled out where there's orders coming into the market. Now, you combine that with ICT concepts, and I think it's extremely powerful. And this week, we basically debuted this, and it's just really funny to see how relative equal lows line up perfectly where what the actual orders in the market are saying. Relative equal lows are where orders are. I don't need BookMap to know that, but having that extra confluence is it really actually helps you hold trades longer. So I get confirmation that there's a ton of orders resting down here, and now I'm like, this is beautiful. We're going to hold this trade straight to relative equal lows, and we're definitely going to get tagged into this 5-minute gap here. Like, that's going to be the draw. Okay, so entry here, and this trade ends up delivering 100 points to the downside in about 20-something minutes. Okay, full TP was, I got out at 98 in the full 5-minute fair value gap. So a beautiful trade. Now, I want to kind of give you guys more educational value, and I want to show you that there was actually 2 other opportunities to short this on Thursday, and I'm going to show you the second one, which I think would have been the second best opportunity to short this. So if you miss the 1-minute inverse, if you hop onto the 5-minute, we get a 5-minute inverse. Okay, so here's your next opportunity to short this trade. 5-minute inverted for value gap here, right here. And now this trade setup would have looked like this. You would have taken a short here, and your stops would have been right above that 5-minute gap that inversed it. Okay, right around that 5-minute gap. Hold on one second. Let me actually confirm something. Okay, no. So this would have been the entry here because this gap didn't invert, kind of tricky. And I would have ran stops right above that 5-minute gap. So you're risking about 26 points on this trade to take this into the gap for about a 1 to 2.59 trade on the 5-minute time frame. So wider stop because it's a 5-minute time frame, but the RR is still very, very appropriate. So the 5-minute confirms a 5-minute inverse trade, and you're in on the confirmed candle break, okay, shorting down into the 5-minute gap and relative equal lows. That's going to be option number 2 for this trade. And now I'm going to show you guys option number 3, which is a 15-minute inverse, which you get here. Okay. So the market gives you 3 opportunities to short this. So now this 15-minute break would look like this. Stops above the 15-minute candle. You're running a 20-point stop, targeting the 5-minute fair value gap and relative equal lows for just under a 1 to 2 at the lows and a 1 to 2 at the 5-minute gap. So plenty of opportunities to short this if you know your inversions and you're looking for it. But this trade setup was a very, very beautiful one. Now, I know this was a counter trend trade and it was a higher risk trade, but when the market starts to engineer relative equal lows like this and we get all the structure and V-shape out of the higher time frame PD array, I love taking trades like this. If you're with me in the Discord, you know that a lot of our trades come out of higher time frame zones, whether it be a 1 hour or 4 hour. And when it delivers out of those zones, it becomes very strong, high probability trades. Now, it's funny because watch, we're out of this trade here at the 5-minute, and this is the reason why, because this market just bounces from here very, very aggressively to the upside. So you got to know your zones. This is the zone you want to get out of, and you want to take full TP at the relative equal lows and or at the 5-minute bullish gap that the market just wanted to fill before going higher. So beautiful trade setup, great confluences. Being able to combine all this stuff in real time, obviously it takes a lot of practice and a lot of skill set. But when you're able to read the market like this and you're able to have these, these skills and tool sets in your arsenal to be able to deploy at any time, it takes the guessing work out of trading. And again, guys, this is not going to happen overnight for you. I'm never going to sugarcoat it. If you sit here and you can constantly review these YouTube videos and you review your own trades and you journal your own trades, you will continue to get better reading price action in real time. So that is our trade review. This was from Thursday, August 14th. Go back test it for yourself, study it for yourself. And I hope you guys are gaining so much value from these trade reviews, because let me tell you, if you're watching these trade reviews, at this point, you'll notice that a lot of these trades look exactly the same. It is pattern recognition. And if you can identify the patterns in real time, you will be able to take a lot of money out of the market. Have a great rest of your week, and I'll see you guys on the live trading floor.